Hello and welcome everybody to the weekly recap. Today we're going to dive into the weekly topics, our positions, stocks, crypto, everything as usual. I've also pulled up the world ahead from the Economist today, simply because it was released this week. And the old one was kind of very precise in predicting. I don't want to say predicting is probably the wrong word, but they kind of nailed a lot of topics and they watched it as a clock. So we watched it as a clock for this year. And the next year looks pretty different. And I'm just giving you my raw, unfiltered thoughts here. And there's also a reason why I don't want to call it predicting, because the market is a probabilistic environment, right? And while we can increase our probabilities to a very, very high percentage point, it's still, in the end, it's still a bit like rolling a dice, even though it's a refined dice. But at the same time, I don't want to predict and I don't want to pretend I know anything that you don't. I just look at this picture and I come up with my own conclusions, and I might be wrong, I might be right. And also, it's not a prediction simply because a prediction means I'm convinced that this is going to happen. I'm not convinced that anything is going to happen. I'm always open-minded. I'm always assuming I'm missing something, and everything and anything can happen. The only thing I'm going to do is I give this an interpretation. I look at it and I come up with some conclusions which sound logical to me according to my already existing bias, and I just add this as confidence on top. And I could make this sound very smart and very convincing and all that by simply saying this is it, but it's not it. And it's, as said, it's not a prediction. It's just me telling you my raw, unfiltered thoughts. And I don't want to talk in certainties. And I think everybody that does is not really understanding the reality of trading. And so let's look at this. If we assume it's going to be a clock again, which it doesn't really look like a clock this time to me, but if we go for each month again, there might be something timing-wise to find in here. But one thing stands out quite aggressive, and this is the amount of war machines everywhere, guns, tanks, shootings, drones, satellites shooting on the planet, whatnot. So it's a lot of war stuff going on. Another thing that's really standing out is the sirens. I don't know the English word actually. I probably should have looked it up before. I know I have read it 100 times before, but I probably never spelled it once in my life. The sirens, I think, also stand out. So many of them could mean some kind of pandemic, could mean simply healthcare and all that stuff. Also, if you look at the pills, so many pills flowing around here. Points towards the health sector going to be important. And I thought this anyway, simply because many of those health companies came back quite aggressive, and some of them even entered accumulation already, like Moderna here. That's why I'm long. And if you look at, for example, Novo Nordisk, it's also kind of retracing a little bit here. And so I would be interested in along here as well. But my usual approach is, first of all, I'm patient. So I don't need to be in this play right now. I'm watching this since a few weeks, and I thought about entering here. Even though there is no real structure, I thought maybe it's a good time to buy. But I have my strategy, and my strategy simply says, as long as we're in a downtrend, we're in a downtrend. And as many of those other plays are showing, like Moderna, bottom accumulations, especially if we want to see a big pump, bottom accumulations can take time. And we are in this range since 7 months already. So there is really no need to rush anything. And this is also why I like the stock market so much, because it gives me time. And I'm here for time mainly, making money for sure, but also with the minimal time effort, because otherwise I could also just work a day job. And so I want to be in this stock, but I don't want to lock in my money for 7 months or something, because even though maybe this is the bottom and maybe I don't like have a big drawdown with this position, it's still at the same time, if I put my money in there and it's locked there for 7 months, my money's not at work, right? And as a trader, all my capital is my workforce, or whatever you want to call it. And so locking my money into a play that's not moving is for me more or less like a loss, because in those 7 months I can play other plays, build shorts, play other sectors, whatever, instead of like locking it into such a play. So as said, strategy as usual. We have the trend line. Trend line should break at some point. We probably have then still some accumulation to do. And as long as this is holding, this area looks very juicy, very interesting to me, simply because we had long accumulation here, and from here the real vertical move started. And so going long somewhere here makes sense, or we should break this maybe, and then yeah, this is, for example, a healthcare sector play. We have another one here. Hoodstock brought my attention to it, which is making some fat loss, muscle grow mats, and they go into the second round of their studies. They also do something else, but this is also a big topic. I mean, how many people would like to have a six-pack and big muscles without and no fat without working for it? So I think there's big demand for such medicaments, and it's better than steroids, because steroids have a lot of side effects, and those seem to not have those side effects, at least as far as they know now. And so I think it's going to be a big topic as well. And as said, if you look at those healthcare companies, you will see a similar picture on all of them. Basically, the whole sector got like pretty heavily hammered. And so I think there are great opportunities, and the picture is more or less just validating my thesis a little bit here with the syringes or something like that, and the pills and all that stuff. So adds confluence somewhat to my healthcare thesis. Other than that, we have the control in the brain, which could be some kind of new tech, who knows, maybe it's Neuralink, maybe it's something else, I've no clue. Maybe it's also about GTA 5. But it looks a little bit like mind control or something like that. We also had this conversation about GTA 6. And I don't think people realize what kind of asset this whole game is. I mean, it's like a real world simulator somehow, right? So you can drive cars, you can shoot people, you can rob banks, whatever. And I mean, there's even a feature, I think, or it was in Red Dead Redemption or something, where you get like measured how good or bad you are. And I mean, if you like just scale this feature a little bit up, you can build such crazy psychological profiles of people. And I mean, how much money are those? Is this data worth, right? You can like you can analyze millions of people and their behavior and how they react to certain events. And it's not important that this one single guy or me that I'm doing this or that. They don't really care about this. Maybe if I'm a real psycho, maybe they scream me a little more or whatever. A real psycho in the game. But what's really valuable is that they have metadata of millions of people, and they can use this kind of data to manipulate people, to tell them what they want to hear, to do the opposite of what they want to hear at the right time, and all of those things. And there was like the scandal with Cambridge Analytica, and when Trump was elected the first time, and they used this kind of data to manipulate people. And I mean, it's probably even got worse since then. And if I look at my social media feeds, like on X and all that kind of stuff, how tricky they're manipulating one already with ads, and not just ads, but also how they're feeding you certain topics at the right time. Those things only get worse. And I think those kind of games and all that stuff, I mean, it's huge. They make billions of dollars with this game. And it's a public traded company, and so they have big interest in data, in my view. So yeah, could be something. 250. I think the US is getting 250 years. If I'm correct, this hand is like somebody like a revolution kind of fist. There is this symbol of revolution, or from left-sided parties or something like that, but I'm not quite sure. And it's chained more or less. Yeah, we have a lot of rockets, missiles or rockets. I think this is something else. This is not a rocket, but I think these are war rockets. We have a lot of robots. I have made this post about robotics and how I think it's going to be important in the future. And also here, more or less simply confirmation or a confluence point. A lot of robots. This is actually one of the first robots that could walk like from, how's the company called? Boston Analytics or something. And yeah, the further we go down, or along the clock, if you want to call it a clock this time, is the more advanced the robots get. We have here the Chinese president. I think this is Putin. I don't know this guy. This is the Israeli president, maybe. Yeah, Putin doesn't look too happy. Jinping does look happy. The Israeli, if it's him, he looks not happy at all. Who knows what this means? It's at the last quarter, more or less, of our clock. We have the whole world is basically a ball which gets played or gets kicked. I mean, we have the FIFA 2026, so we have a World Cup. We have also the Money Tower post that that one should probably not go too close towards this event. I'm not quite sure why, but we will probably see and find out. But other than that, I mean, obviously, yeah, it's football and they point towards the FIFA, but at the same time, the ball is getting, the ball is the planet or the earth or something, and it gets kicked. And so for me, the world is being played, being kicked. This is my interpretation at least. And here we have one chart. We had a lot of charts in the old one, like many arrows pointing up, pointing down throughout the clock. And here we have one chart in the middle and it starts high and obviously it chops around, but it ends definitely lower. And we have some kind of swords before, which could mean some kind of fight in the market, war, like, yeah, that definitely doesn't give me bullish vibes if I look at this. Yeah, other than that, we have the Ukrainian president here. We have some Egyptian kind of old historic boat. I'm not quite sure what this should mean. We will probably find out. Other than that, I think, as said, there's so much room for interpretation, and I could not pretend I do know anything, or I do know anything for sure and that it's certain. But I don't. I could just give you my interpretation. I have my main thesis. They are not built on this picture, but this picture somewhat validates some of my theses, and it also adds some new topics to think about, especially like the amount of war machines and all that kind of concerns me a little bit. We will see. Other than that, we talked about the pharmaceutical stuff. As said, I think great opportunities here. There is also, what else did I want to show? Pharmaceuticals. No, I think I talked about this already. Yeah, other than that, let's cover some positions. I got stopped at break even on the SPX short. Simply, I decided to go with my stop to break even for one big reason, and this is like the big absorption wick here, and we did not close below the 0.5. And this is another thing I wanted to address today, because a close below the 0.5 means we go to the range low and then measure from here to here, most likely. And if we don't close below the 0.5, there is no reason to expect prices to go down here. And now we have 2 times in a row we have like big absorption, close above the 0.5. And so I think a bounce towards those highs, or even the range high here, is likely. And I still can add back to my short anyway. I don't need to be in this position. And I still got the Nvidia one running. Looks way better. Also with my stop at break even, simply because structure is not broken. I'm shorting against the trend here. But at some point, I need to short, right? It's always an uptrend until it's not. And I'm just trying to get in, holding my risk tight. And you see with this, more or less, even though I risk round tripping the position now with not taking profit here. I mean, as a swing trader, I will round trip so many positions. I don't really care. I just want to get my foot into the door when I see signs that make sense. And so now I'm in this trade. It nuked 10% ever since. Maybe I get stopped at break even. Maybe this turns out to be a great Pico top short, and it's risk free anyway. So as said, for me, it's a win already. We have Google here, also not breaking down like I would like to see it. So this low is still holding. We have absorption at the lows. willing to take a full stop here. And this is also the reason why I went to break even here, because I don't want to pay 3 full stops for being short. Now, if I pay the Google one, that's all right. Nvidia and the SPX get stopped at break even maybe, and that's also all right. And I'm basically very risk-free, because if Google pumps higher, I still have the spot bag of Google from way lower, so this covers the stop anyway. So I'm willing to take a full stop here, but not on Nvidia and not on the SPX. And you see, this is always how I layer my positions. It's not static. It's not like, oh, I always have the certain kind of rule set. These are 3 different positions, but they all basically somewhat shorting against stock market strength. And so I treat them a little bit as one position and don't risk getting 3 stops in a row on all of them. Is to me the right approach. The rest of my Mara loan got stopped here at break even. We did 70% TP more or less, 35 here, 35 here. Now I got stopped at break even. Doesn't look that strong here. The close below this low and this low. As said, Moderna, we talked about Moderna. Still think it's in a good place to accumulate. Invalidation is clear as well. SMG, vertical farming, still in, doesn't do anything right now. Yeah, as said, Google, we talked about Google. GME got stopped on the rest, did a 25% here. We have CMP, a very old position of mine, 55% TP, now it's breaking down. That's all right. We did a TP on NEO this week, simply because it broke structure here and hit my trailing TP. And now we will see if we can like bounce from somewhere here. But as said, I'm turning more and more bearish the more of those charts break down. The more bearish I turn, obviously I'm trying to long at some point as a counter trend long. But yeah, stock plays. We have here something interesting going on Rigetti after a 60% drop. We are now reaching this big FVG and the opposite pole behind, and there is this demand here below. So if same strategy as always, if we start seeing some strength here, breaking this trend line or something, I might willing to add some of the profits back, but for now I'm completely out of this one. And you see how aggressive they came back. I mean, a few weeks ago we talked about, yeah, we are up here, everything is all right, and now we are down 50% on all of them. So very aggressive stuff. If you trade it, manage your risk properly, be disciplined. Other than that, I don't think I changed too much this week. Yeah, I took a stop loss on plug here. Yeah, worth it, worth a shot. And other than that, nothing really changed on the stock portfolio. Let's talk about crypto a little bit. A little more exciting here ever since we started to break every single low. And here we have the 0.5. This is what I wanted to talk about originally. This is the 0.5 from here to here, right? And as I said, if we close below the 0.5, the probabilities of us reaching the range low increases a lot. And we have that now. We have 1 partial, 2, maybe a third body today below the 0.5. So the range low became much more likely. And from here, I'm very interested in this 8-day long. I still see it as a counter trend long. Targeting somewhat this, or maybe if it turns out to be a bigger bounce, maybe here, the range high. But why would I expect anything but the range high until it's broken? But I really like this idea. I think PPQ also shared the BTC pound chart today. Oh no. Which has a similar level on the 5-day. So I like the level. And also if you take the psychological aspect into account, which is also important, we are now losing 100K. Many people are going to turn bearish because of that. And then another drop lower, losing even 90K. 2 psychological levels lost will probably destroy many people's bias or sentiment. The question remains, can we close below the key low here? This is what I'm eyeing right now. We have already one daily body below, and it's also a big daily body, so more than 50% of the body. Now the question is, can we close the weekly below? And the more daily bodies we close below here, like 1, 2, 3, 4, 5 daily bodies, the stronger the close below gets. And this is Like this is a clear break of structure below the 0.5, below the kilo here. Structure is definitely turning more and more bearish, but at the same time, I'm looking forward to take a long here. And similar on ETH, I even like this level more. The problem on ETH is here that the level is kind of wide. This would be my entry idea, unrefined, more or less, covering the whole level, covering the FVG, covering the 786 here. It's also in the area of the 618 of the whole swing. So I like the whole idea very much. And we have on ETH BTC, we have another level here. And a third drive, we had 25 days for this one, maybe in the next 20 to 25 days. We reach this level, would be a nice redrive, maybe back to the range highs. ETH a big counter trend bounce here. I mean, 40% is not nothing. So very, very interested in this long. And refining, as always, once the level approaches, I want to see that this one hit as well. I want to see BTC somewhere close into this level at the range low. And then this could be a very nice higher time frame trade on size, even though I still consider it as a scalp with structure breaking down here. But yeah, also counter trends can be traded. So other than that, major Monday is on Monday. Looking at the weekly closes, just real quick, Tether dominance is creating another high, closed above. Yeah, I mean, I had this conversation today already. We have an uptrend, which is like not favoring longs, but we are also at the range high here, which is kind of favoring longs more and more, because we are in premium of this range. And see how ever since we reached this area in March of 24, or even, I mean, already in 23, we entered this area of the chart. It was nothing but a big range, like selling here, buying here, selling here, maybe buying here. Who knows? Let's just trade the range and add it as confluence here and here, and maybe we catch some beautiful trades. And also, I'm sitting in these two shorts, and the question is, will I TP here? And yes, I will probably TP 30% of this one. But I'm trying to milk this trade even further, simply because, as said, if we really enter a bear market and BTC goes to 30K or something, wouldn't it be very amazing to have a short from there? And it's the same, to me, it's the same like buying down here. Sometimes you need to be patient, right? Not every trade gets profitable immediately. It's also, if you want to be a swing trader, it's a very, very important skill that you have patience, that you're willing to round trip some of those gains in order to build those higher time frame positions. But instead of selling some of the short, I can also decide to long. And this is what I'm doing here, because if we bounce here, I will pay back a lot of those gains on paper. But at the same time, my long will cover all of that. And this is the idea. And as I said, this is always how I play it. This is also why I took this little long last week, 50% TP, got stopped at break even. I didn't need to TP my short, and now I'm happy because it's even lower since then. Yes, so I think this sums the week up pretty nice. As said, on the stock portfolio, on the alt stock portfolio, not a lot of things have changed besides the shorts and all that. And on crypto, this is the plan. Higher time frame plan is clear. Now it's about patience and executing at the right time. Yeah, and just one thing, look at the crypto news. I mean, it's crazy how bullish they still are. Michael Saylor is buying this and that and blah, blah, blah. So to me, all of this looks pretty much like a top range, and everything they do here is attracting more and more and more buyers in order to offload as much as they can before they really nuke price. And I mean, it's already down 30% or 25%. But look at the chart, it's not even started. If this is really the start of the bear market and we go down to like 30K or something, this is just the beginning. And I want to be prepared. That's why I want to take want to ride those shorts as far as I can. Okay. Soybeans are doing well as well. So in case somebody cares about soybeans, probably TPing here real quick, or real soon, I mean. Let's see how Monday develops. And also, wheat is starting to look interesting. We seem to break the trend. And I really like wheat. I almost use it daily, to be honest. And it seems like it's at a good spot. So once we start changing the trend here, I want to be along on the long side, targeting something like that. And I mean, even wheat can move quite aggressive. So commodities look somewhat like an acyclical play for to anybody that's interested in that. Hedging and all that stuff, hedging against risk. Commodities could be the way to go. Soybeans is already doing kind of well. Let's see, maybe we can catch wheat as well. Okay, I think that's my summary. So you guys now have some time to ask questions. Let me check the chat real quick. BTC breaking down with ETH remains above its 3K previous swing low. Interesting, yeah. Didn't expect that. But just think about it. How many people are going to say this is strength? Like ETH is super strong here. And it might be the case, right? But according to context, they're probably looking for buyers here. And this is how they get them. This is the same way why they save the weekly oftentimes. Weekly candle closed here. It's like, yeah, weekly close inside. Everything is good. Everything is bullish. And ever since this close, we nuked another 11%. So I always think in terms of how do they attract buyers? How do they attract sellers at the right time? And as I said, this relative strength of ETH here smells a bit like a trap to me. But who knows? Who knows? I wait for my level down there. Thoughts over this? What is this article? Can you sum it up real quick? BTC bear market is in. As bear market grips crypto. Interesting. Haven't seen that, to be honest. And I don't think it's already a confirmed bear market. I mean, structure is definitely turning bearish. That's true. But I would say this is what I would consider the real bear market invalidation. And we have a daily body below. As said, I would like to see some more, because one daily candle can be printed in a very short time. They push it down, they push it back higher again. But it's definitely interesting that they talk about the bear market is in. I don't know. I don't watch Bloomberg news, so I don't know if they're a counter signal or if they're on point most of the time. But it's definitely adding some confluence on being long. But on short term speaking, this doesn't really mean like we need to like bounce from here. We can also go down another 5% within one day. And this headline was just a day earlier than expected or something like that. So it adds a bit confluence, but as I said, I don't have real data to define if this is good or not, because I don't know if Bloomberg is on point or not. From Twitter account Coinborough. Interesting. It's the first bearish headline I've seen, but I'm not so much news hunting right now. So add confluence on the long side. But from a structural perspective, and this is like the cleanest perspective of them all, because you can't really interpret structure too much. This is the key low, and this is the 0.5. We have some closes below the 0.5 already. We have a close below this key low already. And there's not so much room for interpretation. Now as said, the more closes we get, the better, the stronger. But at the same time, we have them already. So structure is breaking. Structure is definitely breaking. And with the news kind of thing, it's always a bit like, yeah, I can give it a little bit of my bias interpretation, or they are a bit early, a bit late. So for refined entries, it might be a little bit too narrow and too much interpretation, but it adds confidence, as said. At the same time, we have this close below. If you get a weekly close below, if you get several daily bodies below, doesn't look too strong to me, at least. So I'm not saying we're going straight to 30K from here, but with the close below 0.5 and the swing low, I'd say we go at least here, probably even heading for this. And then the question is, how will this level react? Because many will look at this and say, okay, structure is lost. This is why I marked this kilo as well, because for me it's only over once we really lost the level, so this area here in between. And so yeah, two lows. But obviously this is like, this would be, I would consider this the real structural break, because we could range here forever, and really only if this starts breaking down, this top range here, then I would consider it like a real break. But obviously we don't want to talk about or think about, oh yeah, is it over now, or we could already be halfway through and all that. So I want to get early signs. So this was the first sign, the close below here. This is now the second sign, a real big one. And then obviously we can still trade this bigger range here. But then once this breaks down, I think 30K becomes very, very likely. Where's the 0.5 of the whole swing? Yeah, it's also here. So once we start losing this area, so this low and this area here, this is going to be the real like sign that we are going to the range low, which is then somewhere in here. I think the space is going to hold. And we have the monthly double hidden. But at the same time, as I said, you don't want to wait for this to say, okay, good, now I'm sure it's going to be a bear market, so I'm starting to sell here. No, you want to get early signs, you want to get top signs, you want to refine your approach as much as you can to get out as early as you can. And then obviously we just get more confirmation on the way down, and these closes are already some of the confirmations. And see, how do you interpret my Monitor's tweet about Chinese New Year pump? I'm getting confused sometimes. Sorry for the going off topic. Yeah, I mean, Q&A is Q&A, so not off topic at all. He simply said it's going to be bullish, and bullish doesn't mean we gonna rip to 200K or a big altcoin pump to new all-time highs. It could also just be a counter trend bounce, right? Just look at the previous bear markets and just look at like a 40% bounce, more or less, counter trend. It looks on the chart, looks like nothing, but I mean, if you can catch a 40% pump, that's nice, and it's bullish, right? And look when it happened. It happened around Chinese New Year in 2022. And so should we go down, we maybe find some longs here. We have some kind of counter trend bounce, and obviously a 50% bounce in a very short period of time is going to feel very bullish, but it doesn't change market structure. And this is how I interpret it. It adds confluence to a long level. Should we approach it around this time, simply speaking? And also on ETH, just look at the previous bear market. Those counter trend bounces are not random, because people are bullish here, they're bullish here, they are not so bullish anymore. Should we really buy the dip? And look at this. I mean, then it's here, it's nuking. Within 1 week, we have 30%. And from there, it starts to go up. And I mean, if you caught the low here, it's a 50% bounce, right? It's crazy. It's a huge bounce. And also same time, Q1 into Q2. And this is tradable, obviously. And this is what this post means in my view. Bullish means bullish. Bullish does not mean new all-time highs. This is a very important difference. What's your ETH refined entry for longs? Yeah, so simply here the 2-day is already a refinement in my view. What I'm really trading is this area of consolidation. So this is the demand. I refine it down on several time frames. So I want to enter in this area. So this is not a predefined entry, and whatever happens, I need to get in at this price and have my stop loss at this price. I'm very fluid in my approach, so I will probably enter my position here and try to scale it down so that it looks somewhat like this. And as usual, same approach as usual, price approaches here. If I get my signs, I pull the trigger, I add size. You can watch it live once it happens, because I think most refinement happens once we are at the zone. I can't tell what level is going to work now, simply because there's a certain amount of randomness, and I can't predict the future. I can refine the levels down, but I'm not a robot, I'm not a trading bot. I don't need to execute at this exact price. I'm gonna be very fluid once we reach this zone. And then refinement obviously also happens with dominances, getting confluence here. And also we have some levels on ETH BTC and ETH dominance. And whenever everything hits together, the more, so it's probably not that everything will hit together perfectly, but the more of those charts hit at once, the higher the percentage likelihood of this level working. And then I have also some kind of execution strategies on lower time frame. I can look at absorptions, look at order flow, look at momentum breaks to define a refined entry. And my first entry is probably looking like this, trying to scale it down. And then if I have like time and if I'm around, once this level hits, I can add a second position, which may be my first entry, maybe down here, and I play it way tighter on lower time frame, trying to add to this position. You can find this in the study area under position management. I have detailed examples of that and how I do it, but I don't do this all the time. And especially make sure if you never did this before, don't ruin your higher time frame levels, because a trade like this is also a lot worth, right? This is a potential 4-hour trade, maybe even more, and maybe even way more if I'm able to refine it down and scale in. But at the same time, I'm not trying to over refine something into like something unrealistic. I don't need to have a 10-hour trade or something. A solid 4 to 5-hour trade is worth more than 5 failed 10-hour trades, because most people can't handle those losses. So if you're new to the game, play it a little bit wider, play it a little bit more relaxed. And yeah, this will help your performance tremendously. And as said, I'm not here to prove that I can trade 10-hour trades. I'm here to make money, and I'm here to have as much time as possible. And if I have the time, I refine it down. As said, I try to get in a lower time frame, because if I can catch one of those, the beauty is not that I'm going to trail it up here to a 10-hour position, but I can then TP way earlier, for example here. So let's imagine structure is forming something like this. We nuke into this level, we consolidate a little bit, and then it's going higher again. The beauty is if I catch a lower time frame trade very tight, I can then TP at this supply here or at this, making me already profitable while not touching the big position, because I could keep this one, for example, not TPing it, just maybe removing the risk once we reach the 0.5. But this one makes me already profitable. And if I then round trip the swing position, it's not that bad because I made already some money. And at the same time, this one prints me even more if we go to the higher targets. And so with this approach, like having a low time frame or a short term position, a long term position from the same area, this is the maximum of lower time frame trading I do. And this can be very effective if you know what you're doing. How do you make your supply and demand zone? I don't really make them. I don't have enough size to create supply and demand zones, but I just look at the structure. And simply speaking, you look at it. So you look at this chart, and it's very obvious to me, at least, where demand is. So demand is down here. Why? Because price came here, bounced aggressive. I mean, 200% or something. Where supplies where whales sold aggressive, so they sold here in 21, and look what they did again. Oh yeah, they did again, and we have from the same area, we have another 35% drop. And it's not that hidden, right? I mean, you have supply here, whales sold aggressive here, they did it again. Simple as that. And if you sold alongside them, you made a lot of gains. If you didn't, yeah, big drawdown on your position. And you see this is done, then you can refine this a little more, like here. This one would also be supply. Didn't work as well, so not all work again, and not all work well. And then if you look at local structure, it's same story. The more local the structure gets, the less likely your reaction becomes. And you see we have consolidation here, big sell-off. And so I don't care about this block too much. I don't need to sell at this block, right? Why would I need to sell at this block? If I want to short here or if I want to TP, I want to TP in this area, because in this area, price consolidated and then it nuked, and it nuked quite aggressive. So from this point, price nuked 17%. And so within here, I want to be a seller. And this could be selling my long position or selling with a short. And we have the same story here. this is big supply. Obviously, you can then refine it. You can also mark out the blocks, but then even more, zooming even more out, this whole thing is also supply, simply because from here, price consolidated and sold off aggressive. And everything else you do is simply refining. And as I said, it's not about finding the perfect 21-hour block, even though you can use them for refinement, but be aware of those higher time frame concepts: premium, discount, supply and demand, rules, and everything else you do is refinement. You have then lower time frame and higher time frame positions on different exchanges, right? Exactly. This is how I then usually play it, simply because adding to the same position makes no sense to me. I move my price too much. If it's a tighter position, I want to maybe want to play it on higher leverage and all that. So I have more control by playing on different exchanges. And at the same time, it's also risk management, because if one exchange goes bust, you have then not all your funds on this one exchange. Makes sense from several perspectives to me, especially now in the bear market. So if there is exchanges failing, it's gonna be in the bear market most likely, and so keeping the risk low on those exchanges might be a good idea. Looks like a nice developing 3 drive there. You mean those wicks? Probably. Yeah, it's the same I'm looking at here on ETH BTC. As said, like 25 days, and from here another 25 days, late November or something like that. Would make sense. Wrong measured. Would make sense to me. Black Friday sale or something. Also something to look out for, BTCD. Should we start losing this? Structure is turning a bit more bearish here. Big wicks at the top. Big wicks at the top. Could mean back to the range low, back to fill this gap. Makes sense to me. And this could be also a nice trade for potential altcoin outperformance with ETH. And then you can always use those majors to get a little bit more confluence. If you use, for example, this, okay, we say ETH minus 15% against BTC, mean the level somewhat like here. So if they move together, this chart is not moving as much, obviously. And then from here, maybe to the range high, maybe even higher, depending on what BTC does. And it's 50%. And it would then also maybe line up with something like that. But I would be more bearish here anyway. And if we break this, and if we should start going higher, that's great, right? I mean, then we can be happy man if we bought some longs down here. But I would not bet on this. People pay back all of their gains usually because they expect always a range break. They expect always higher prices. While in reality, especially crypto, it's basically just ranging. Look at all those most major altcoins. Look at ETH. What did we do ever since 2021? It's just one giant big range. Look at Sol. What did it really do? Okay, this is market cap. Market cap did do something. But look at Sol. What did it really do? It did range, right? So why would we always expect a trending market when it's in reality simply just a range? So break of the 0.5 here, break of those lows, probably means range low for Sol. ETH to 6,900. Yeah, I'm up for that. Why not? Why not? But before I want to get this long, please. Yeah, and another key factor why I like this long is because losing 3K would make a lot of people very bearish. Have an eye on the price scale as well. Even though we don't really care about price, we care about percentage moves, right? Losing 3K will make so many people bearish, just simply because it's 3K psychological level. Adds confluence to our long down here. Because what happens when people get bearish? They sell. What do market makers want in a long level? They want to accumulate, they want to have sellers, and they want to buy from those sellers. So people sell because 3K is lost, price bounces quite aggressive, people sold everything, people get frustrated, people buy back here, and we do the same thing again, baby. What if front run with deep pair again? No, then too bad for me, probably. I mean, same area, looks kind of similar. So let's say 10 to 15% on the euro level. 10 to 15%. Maybe that's why we want to enter a bit early in this level and refine when it's there, not trying to get in here. But yeah, if I get front run, I get front run. What is really lost with getting front run? That's also the question. I mean, it feels bad, obviously, right? We don't want to get front run, but what is really lost? Like taking no trade isn't a loss, and if you then observe and gain experience while not losing money, it's a win, in my view. BTC macro tops some weeks before SPX and gold rallies for some more weeks. Looks like we are in this scenario right now. If everything unfolds like historically has been before, always, yeah, it's exactly this. And imagine it happens 3 times in a row like that, and everybody will know. But next time, if this is really the case, you will see a lot of theses and a lot of theories of all kinds of people telling you this is always how it has been. And it usually takes 3 times. This is also something you will observe on trend lines. You have like obviously the first touch, which is like, yeah, and there is no trend line, obviously. Then you have the second touch, which is then creating the trend line. And then you have a third touch, which is kind of working most of the time. I mean, it also always probabilities, right? But there is usually the fourth touch doesn't work anymore. Maybe just a little bit, so people, trendline traders get trapped and thinking, oh yeah, it's working, and then it gets stopped. So I have a thesis that things need to happen 3 times until the majority sees it and yeah, acts on it. On ETH BTC, what do you use as support level for tab 3? Only thing I can find as good level is 18-hour OB. The BB got taken with 2 tap already. I mean, it's a weekly, right? It's a very big, fat weekly break block. Or what do we talk about? Thanks, man. Fun to me as well. And I appreciate you guys as well for listening, for being here. As said, I really enjoy this. And I also figured that video content is not that bad. I just can't really record video content because I get so perfectionistic, and that I have to record everything 10 times and then it's just annoying work. But doing it live, I mean, I only have one shot. If I talk garbage, I just need to go on and pretend it didn't happen. And so it's more my way of doing it. Yeah, I thought you talk about the weekly. As said, don't fall for like you need to find the 14, 15, 16, 17, 21 hour block. This is all nice for refinement, and the more you find the better. But like keep it simple, and missing something on weekly but finding something on the 18 hour seems like you're a little bit too much into the whole refinement stuff. So stay on the higher time frames for this, and then if you want to refine it down a little bit. But if you have the weekly already, what else do you want to find in this area? As said, there is more, but you see there's how I have my bar here looking. It's daily, one day, 2, 3, 4, 5, 6, 7 day, weekly, 2 week, 4 week, monthly, and down is in divided by 4, or no, yeah, not really. My favorite time frames, but you see I don't have like 265 and 222 and 211.2 whatever kind of time frames, because it's just adding more complexity and taking more time for not really providing better results. And I have also not seen a lot of people who can prove that I have better results with that. And that's also the thing I meant with my post today. People think if they refine it down to the craziest numbers and stuff, suddenly they will have certainty, but in reality they just add more complexity, which then usually leads to the opposite while taking more time. So as I said, keep it a little more simple. As I said, those daily ones are good to look at. Don't take much time. And then if you have like already 7, 6, 5, you have already 3 time frames, which is my rule of thumb. And then if you want to refine it even more, you can obviously. But to me, it makes more sense to wait for price to come here. And then I look at it at the live price action, and my real refinement begins then. And then I can add a lower time frame and tighten my stop loss or add size or whatever. What type of reaction are you looking for? Yeah, as said, so sometimes some kind of absorptions. Do I have any? I can show you the example. I took a long on ETH here. Yeah, there's some kind of level, nothing optimal, but we are at the 0.5 of the whole swing, so it becomes more optimal to be long. First refinement I'm looking at, I don't need to like get into the peak or low here. First of all, I have a life, so I don't carry my phone with me all the time or getting all of my alarms. And also I don't need perfection to make money. I didn't catch this bounce, but then I saw a change in trend, and this is no guarantee, and I don't want to enter here. I want to enter on a pullback, so I looked at the structure and I said, okay, good. Once we come back down here into this area, I want to be long, and I went long, not even really refined or anything, targeting this. I think it was something like that. Price nuked, didn't get stopped, and then I TP'd 50% here. Oops, on this high, 50% here at the 0.5, and then I got stopped at break even with this move. And very, very simple stuff. As said, there's some kind of level, but I don't need to enter here. I just wait for price to develop. I look a little bit at order flow, even though it doesn't give great signals right now. And then I could also try to refine it even more, but as said, nowadays I often don't see a reason for that, and I have other things to do. And so simple as that, TP'd 50%, which was 2R, and obviously 1R because 50% only, and the rest got stopped at break even. So I had a risk-free trade, made some money, and at the same time, the whole idea was only for this kind of counter trend bounce to hedge my shorts. But as said, you can see the whole execution in the ETH channel. And at the same time, in the study area, there is, let me check. If you go to position management, basics, and you scroll all the way up, you will see how I approach levels and how I refine them once we are there. And for this, I use trend lines, I use volume spread analysis, I use order flow, and usually, as said, I still enter on a higher time frame like that, very wide. I mean, it's a 10% stop loss. I enter like that, and then if price develops somewhat, like, let's imagine we go here and we nuke into the level, and this is happening. Yeah, don't make it too complicated. So something like that. This is a wide stop loss still. My entry maybe somewhere here. I can then decide to, okay, I see something, I have the change in trend or anything, and then I go here and I apply this one with invalidation like this. And instead of a 10% stop loss, I suddenly have only a 4% stop loss. I can play on higher leverage. I can build a bigger position size while still keeping the risk in check. Obviously in lower time frame, I shouldn't risk as much as on this one. And then you see from the same idea, I can milk even more. Trading lower time frame, but based on higher time frame. This is always how I approach low time frame. So you won't see me trading a 3-minute breaker block or something. I only trade higher time frame levels, but sometimes I drop down to lower time frame to execute with tighter invalidations. Are you only playing with market orders or using limit orders for mid-low time frames only, for example, and market orders for high time frames? I'm probably going to set up a limit order for this one once we come close, simply because I sleep 8 hours a day and I'm sometimes out of the house and I want to get filled. And with this kind of invalidation, I have no problem getting filled on at least 50% of the size I want. Obviously, this is scaling, so probably like 35% here, 40% of the size here, 2 limit orders, and then I have usually a third one for market ordering. And on lower time frame and mid time frame, I usually then market order because I want to be on the screen. So the example I showed you with the lower time frame execution, I want to do this on the screen anyway, so market order is the way to go for me. Bye-bye, PPQ, by the way. Yeah, sure, no problem. As said, this is what these streams are for, and this is how I structure them every week. We're going to talk about the week, we're going to talk about the positions, you can ask your questions, and then we go off for a nice weekend. And I think that's what we do now. If there are any important questions, you can obviously ask them, but other than that, I'm going to wrap the stream up. Are you doing some cyclical analysis trying to focus pivotal dates for trend reversals? Yeah, obviously timing is a big topic, probably one of the most important ones. The thing is, for example, I don't really trade cycles or stuff like that, but I watch traders who do. So, for example, Camel Finance is, in my view, very on point with this cycle reading. And I take this into account. But obviously, I also know the weaknesses of those trading strategies, and I try to counter them with my own knowledge, and only taking them into account, not trading them. And other than that, I do a lot of like macro analysis, historical analysis. You can all of that you will find in the study area in macro knowledge. Collected already a lot of stuff there, because I think markets tend to repeat themselves simply because human emotions don't change. So 100 years ago, humans had the same emotions like they have now, and buying and selling also did stay the same. Obviously, the tools have changed, and internet and the access to markets and all that, but overall, humans are humans and they're going to stay humans, and human behavior is somewhat predictable. And so the cyclical analysis in terms of, for example, I expect a broader bear market into 26 and bottoming around late 26. And the thing is, I don't really need to predict anything. I have a thesis, and this is my guideline, and I let market structure define if this is correct or not, or if I'm correct or not. So for example, if we just kept on, my thesis was bear market here already. And so we just swing failure pattern the highs. We didn't break out. First confirmation, breakdown here, second confirmation. If you break down here, third confirmation. So my picture gets clearer and clearer and clearer, and I take it level by level. And I can still, like, even though I think this is like happening, or like, yeah, this is happening, the bear market is happening. If structure tells me otherwise, I don't hold on to this bias. And so my thesis is my main thesis until proven otherwise. And I also don't need to predict the bottom or something, because I have the levels, right? I have the demand here, here, and here, and I take the timing into account. And you just need to look. This is why I like to refine once price is there. This is the same way, like I don't use 100 timeframes to refine the level, because in the end it might be random anyway on those timeframes. And so I wait for price to go there, and then I can validate or invalidate the level and shift my bias more toward the one side or the other. And for example, should we like retrace 70% into this, I think it's very, very likely that this is somewhat around the bottom. And then I take market structure within here to define if this is correct or not. And look how easy it could have been in BTC. You connect those two highs, you have a third touch, and then we just grind it through this trend line. And from this point on, it wasn't really a downtrend anymore. And you can then buy in. I mean, I started buying here already, but you can buy more, and then structure confirms itself once again, and you buy even more. And in the end, you won't care if you bought it like 22, 25, or 16K, because in the end, price did a 6, 7x. And so, yeah, I'm gonna do it the same way again, just more refined this time, trying to catch some longs, having a way better plan this time. But as said, at the same time, I don't really need to predict anything. Another thing you can take into account are those 4-year cycles. And what usually happens is we have a prolonged period of bull, and then we have a very short, aggressive period of bear. And the destruction happens usually way faster than the whole buildup. Because don't look at this. Look at this. You see, ever since this low, it took price 1,000 days to reach the high, the absolute high, and then it took 300 days to reach the low. And this is something that keeps repeating itself. So the bear phase is usually way shorter, especially on major assets, simply because if they're investment assets like the SPX and stuff like that, people are passively investing and putting money in there most of the time. And so you will see those sharp drops and sometimes prolonged bear markets, but it was not even a year. And simply from the COVID crash, it was already almost 2 years of upside. And so the destruction happens way faster. And this is what I take into account by me saying like late 2026, if this is the top from a timing perspective on BTC, Let's imagine it's going to be a year, will lead us to late 2026. But as said, I don't need to predict this now, even though I could, and trying to sound smart or anything, but nobody knows. And so I just wait for price to go to my levels. And whatever they hit late 26, and I have a good feeling that it's going to be this area, I'm going to be a buyer. And then I have my execution tactics to increase size and add as on every time frame. Yeah, and forecast pivotal dates for trend reversals. I think this is also something that comes with experience. And if you keep your eyes open and if you play the game for long enough, and I mean like 10 years or more, I think you will see so many things repeat themselves. And I simply go back, study historical charts and patterns, and come up with these conclusions myself, while not being around, while I not was around during those times, simply because I'm only in the market since 5 years or something. How should I know how 2008 unfolded? Because I was not there. For somebody who traded there already, he has the experience. He know how it all felt, how it looked like, all of that stuff. And I can't really gain this experience. The only thing I can do is look at the structure and the chart and then learn from it for the future. And as said, many people I see are so focused on whatever, but not doing this. And I think this is one of the biggest edges if you are able to read the higher time frame structure, because then you know if your trade is a scalp or a swing, and it all makes more sense in the end, in my view. Can you briefly explain market structure on your own terms? Briefly, and market structure is not really fitting. Market structure is a very broad, complex topic. I think I can give you a few sentences, but in the end, I think we cannot talk about this next stream if you're around, because I think I need at least 30 minutes to really explain what I see. But real quick, you look for pivotal highs and pivotal lows, and you want to define if it's an uptrend or a downtrend, right? So you have ever since here, so like I shown on this other chart, from here on we made like downtrend, lower lows, lower highs, and from here on we made a higher high, higher low, higher high, higher low, higher, not even higher high here, but equal. So this was flat, not really a change in anything. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Simple as that, right? This is like bullish market structure to this point. But we want to get early signs, and if you look at this, we're starting to break down the first pivotal lows. As said, from a technical perspective, this is our external low. This is like the real bull market invalidation, but we don't want to wait 40% to say, okay, good, I should have taken profits up here. That's why we look for early signs. And as said, again, look at historic charts, like just spend time on the charts, study. Here, also, the real invalidation is basically here, externally speaking, right? So this was a pivotal low, but if you had like big longs or big spot positions, you don't want to wait for this, right? This is the same story, minus 40%, not really sexy. So you want to get early signs and structure. Even though once you start understanding market structure, you will see that market structure is even designed for people who understand market structure to deceive them to some degree. And this is why the structure looks like this, because technically speaking, your only invalidation is here more or less. But by knowing that this is just air, this is nothing, this is no structure, it was very clear that this is going to break down quite aggressive. And if you look at this was a pivotal low. So this was the top range. And once we started breaking this down, your higher time frame buys should have started turning bearish, because it was very likely that we go down at least here. And I mean, it was not at the pico top, but it was still better than here, you see? And this is the same story. Structure is different, but it's always the same. Same story here. You don't want to wait for the external low down here. And with losing this low and now starting to lose this low, because we reacted once, twice here already, not really being strong, losing this whole area, this little demand area, there is no real structure. This is small demand, this is air. Obviously the range high retest may be reacting, but you want to get early signs. You don't want to wait for here or for here. Best case, you get already signs up here, which is absorption, double top, all this, or triple top. And here was the first break of structure. I posted this also in the channel, and I said, okay, I sold a big chunk of my altcoin holdings simply because of this daily close below, and I knew that we will probably counter trend bounce, but this is not what I wanna experience with my bags. And this is as briefly as I can explain it. I hope this makes sense. Yeah, you're welcome. But as said, Sebarshiru 15. We can talk about market structure next time if I know that this is an issue. I will remember that. So if you're around next Saturday, we can talk about this. But market structure is a big topic, and probably a whole stream won't be enough to cover everything. And usually I do some kind of exercises with my mentees, and they should chart a chart, and we talk about the structure and all that, and then it's about repetition. And the thing you can do for yourself is by pulling up charts and study the historic behavior, right? We always so focused on what happens in the future, but the best way to learn is to look at the past and learn from this structural behavior and what it meant and how you can apply this for the future. Yeah, thank you guys as well. As said, was a pleasure. I'd say we wrap it up now. Next time, market structure. Remind me, good idea. As always, I appreciate your guys' time. Thanks for joining in. Bye-bye.